Hey, we're back on the series of My Finance Experiment. This is the part where I will be explaining how we're going to start and how you will be on your first step into the investment journey, into a financially stable future. So, we'll do the same process. We'll do a get ready with me. It'll be easy for you to understand in simple steps. I'm going to make sure that you're on your path to getting started. So, hey, all right. Just want to do a quick recap of what we did last time. We discussed Nika and Shopper Stop, just using skin's suffering. So this is why I'm using petroleum jelly to let my skin breathe. We were discussing Nika and Shopper Stop. Those were the areas I picked so that we'd be able to understand, the products, the store, the process. So since you're dealing with it on a regular basis, you're probably most alert as to how the industry works. Oh yeah, I'm using sunscreen. Just want to go out for a little chai and chacha. Just trying to understand one thing very clearly here. Taking any company which you use would be easier for you to understand because aware of the process, you're sure of how it works. So any discrepancy from the norm, you would be able to identify, and it'll be easier for you to take the steps accordingly, in the future or currently. So today I'm going to be taking examples of two companies that are easier to understand as well, which is Swiggy and Zomato. Are also listed on the National Stock Exchange. And Zomato is listed as Eternal, and Swiggy is unlisted as Swiggy. Here, this is the kajal that I use. Just defines the eyes. I think it makes me feel and look appropriate. You know Zomato, you know Swiggy, and you know how to create a profile. You know that. So the good thing is that like you're used to shopping from Zomato or Swiggy, and this is purely for that audience because if you don't, then you must have at least placed an order once. Food ordering companies like Zomato and Swiggy are probably the number ones there, and I'm only picking these two because I just want all brands which are easy for everyone to understand because they're in our day-to-day life we are using. One good indicator for these things are they're managing to offer great discounts, and in general they do offer discounts, but I meant like they have um, associated with many more brands and they can get way better deals depending on how much the restaurant's willing to offer. These are ways to understand how a company is doing. So the more options, the more novelty in their features and offers, that's a very strong way to understand that the company is doing well and wants to do better, and they have money to be able to do all of that. Understand what's next. I've applied my kajal. Oh yeah, my concealer. What about that? NARS concealer, and I only use it marginally just to look undiseased when I step out. Skin's not doing okay, so as minimal as possible. In the middle, Zomato had come up with this option where you could place an order from different cities and you could get, I think it was not any and every brand, but it was like really, really sought after, famous household name brands from their cities. So I think Hyderabad had Osmania biscuits, Calcutta had Flurries, that's how I'm pronouncing it. I hope it's correct. And obviously, if I'm sitting in Delhi, you want to be able to order it and you get it next day, which I thought was like a fabulous concept. I don't even know how they were doing their pricing because obviously you paid a fee for having it delivered, but I remember it not being so insane. I think they also had like tunde kebab or something from Lucknow. I think they had Hyderabad biryani also. But like, so biscuits were okay and chocolates and stuff from Flurries were fine because I felt like they had like a shelf life that was available. But anyway, I digress. Point being that this was a very cool feature, I thought, and it just explains that Zomato is willing to do many new things. While Swiggy, I think, stuck to its core and was fab in the sense that, like, earlier they had this with however far it was, like, I think kilometers weren't counted, and you could place your order, I think even 17 kilometers away, and they'd have it delivered. I think Swiggy bought out Dine Out, and I think Zomato created that feature as well. So visiting restaurants, and you could avail of some scheme or some freebie or some dessert or whatever it is that you would eat there along with the reservation. So now it's so cool because it's like I could even go to a barista and I can get like, and if I obviously do a prepaid booking beforehand, I would get like 30% off or I think a 40% off, which I thought was like unreal. Like a cup of coffee and they have a really good pasta, which I discovered because of this pre-booking. So imagine having 30 or 40% off your bill. That was great, right? Like, so Swiggy had that, and obviously Zomato and Swiggy are competing with each other non-stop. Their programs are like so solid. They are, they know that how to get that same customer using both their apps regularly, and you will be using it to compare, and that I think itself is good game. I feel like you are earning so much money and taking such heavy commissions from your restaurant, so obviously cut some slack to the customers. Only obviously it's my perspective. This is the liquid lipstick that I'll be using. It's a Kylie color and it is, okay, cannot remember, it's a butterfly. We've spoken about the company just to give you very solid understanding of what these companies do and how to understand that what they're trying to do, the novelty features and their how they up their game, what makes them a good company, where they're using their money, which they keep rounding up, right? So they're collecting their money from the public. They would buy like a stock in Zomato, they buy a share in Swiggy. So if they're spending money non-stop, so that means the company is getting more and more money. That's how they're using the money. And aside from that, they'll also keep raising money, like outside as well, externally. They'll keep trying to raise money to like run the company as well. It's only I think recently have they managed to become a profit company. Up until then, I think they were just working on like revenue model or breaking even. Sure how they function, but they work on a lot of capital. So I'm going to start breaking it down step by step on how you will be able to understand this company works and how will you participate in their journey and build your journey in starting with investing in your future. So first thing to do is like you open a trading account to be able to get on stock exchange, to be able to trade, to be able to buy a stock, to be able to sell any shares. You have to get a demat account. That could be anywhere. There's Grow, which is also going to do an IPO. There's Zerodha. You must have heard of Nikhil Kamath. He's like, at least to me, now he's a podcaster. He calls people as big as like YouTube CEO and industries biggies also. So you'd see Tanmay Bhatt or you'd see like the In the Wild. She's a beauty brand, Deepa. So yeah, so he's called all these big giants also. And aside from, of course, Ranbir and Kriti and Bacha and all of that. So if you're his fan, you'd know that Zerodha exists, really like one of the big ones. Aside from that, so like there are also bank accounts which have I just wait for it to oxidize so it gets a little darker, which I like. Uh, your own bank accounts. Some banks offer the demat account alongside of it. So like I have an ICICI account and I open an ICICI direct account, which just makes it so easy because your savings account is linked directly to the demat. So it's not like demat will take the money out of savings without your permission or anything. It's just that anytime you need to, like, say I want to buy stock right now on in the hours of when the stock exchange is open, but I want to buy stock, so I don't have to wait for the process. It doesn't even take an extra minute. It's just like I'm placing an order. It just asks me if it can take the funds from the savings account, and I give it that option and it takes it. And let's say I've sold a share, or I'll be able to sell it, and whenever, like, I think it takes a day for it to process, and the following day it'll come to my demat and immediately I can put it into my savings account. It's just a step. So it doesn't even take a second if I need to do that. You can obviously keep collecting the big lump sum and transfer back into your account, or you can do even little, like if you sold like a 10 rupee stock and you got 10 rupees, you can transfer that 10 bucks also into your savings account. So I think like that worked for me. I found it so useful. These bank accounts which are directly linked to your demat is that I've noticed that during IPOs when I'm applying for a lot, like it takes the money directly and I get notified instantly that I've applied. And I've also read online and I've also heard about people who have accounts with Grow or Zerodha, the independent accounts platforms. So sometimes they do have trouble. I'm not saying that none of the banks have trouble, only these platforms have trouble, but I've heard more of those issues on that. People who are on Grow and Zerodha, there are reasons why they're on those platforms as well, because you have the option of using multiple PAN cards, even though you may have one savings account, which is how the bank works. You can have several demat accounts on Grow and Zerodha if you have multiple PAN cards. So let's say you've just been able to use your mother's, you can use your sister's, your dad's, if he's cool with it, your own of course, and you can use UPI instead of it taking money out of your savings. So that's one of the biggest reasons people gravitate towards Grow and Zerodha. There's also Dhan, which I've been hearing really good things of, and I feel like that would be one I would definitely like to try, because I hear, like, the only time I hear about Dhan and people are only saying good things. Like I've yet to come across someone who's had like even one complaint, or maybe I've just not met enough people who are on it. But I think those are like good ways to understand how it is. I'm going to move on to identifying the stocks. So like let's say you have connected to ICICI Direct. This is just giving you the steps of what I've done. And full sleeves are my favorite things around this time, the transitional season. So I'm going to try these cute little silver earrings. Show it to you. These are the Alright, so then you have to log in with your mobile number, your email address. If you want to trade, you have to have one PAN card along with a mobile number, which is Indian, and an email address. This way you open your account. It didn't take me more than a day to open it. I don't know right now if they have any kind of freezing period to like start the demat, but I feel like it doesn't take more than a day. So as soon as you've opened your demat, then you are open to trade. So let's say you've applied today and maybe it's taken 24 hours. So you start tomorrow. So here then you look up your stocks. Zomato, which is eternal on the stock exchange. They changed their name last year, I think. And then you look up Swiggy, and you can add them to your watch list, and you can have, I think, up to 5 to 6 watch lists, and that's on ICICI Direct. Obviously, if you have some other platform you're using and you have more options, then yeah, I mean, so I'll explain to you how I have separated the watch list for myself. Just easier for me to understand. One I put is fashion or textiles, which this is the area of my interest. So I'm very comfortable understanding how these companies work. So I've listed the companies which are of interest to me. So anyway, so you have a watch list and you can identify them. Let's say you added Eternal and you have added Swiggy. I put it on my watch list. Now I won't say that you buy today. You are monitoring how it works. So tracking their progress is by seeing the timeline. So they have a chart option where you can see how they're faring in like 1 day's time. Like you can see the pattern of how much the stock had gone up and how much the stock had gone down. So let's take for example, it is 300 rupees 9:30 in the morning when the stock exchange opens. It was 300, maybe middle of the day it must have become 315, maybe end of the day it became 295. So that's the pattern of how the stock trades, because that just shows that people, the moment like it's going down, people are like, hey, listen, let me buy. And then when it starts going up, people are like, oh my god, it's a good time to sell. So This is for people who are doing the day trading, and that's how the stock is going up. And also, obviously, it adds on to all the people who are buying their stock anyway. Whether you're buying it today and keep it for life, or you're buying it today and selling it tomorrow, that's another kind of trading. But whatever it is, it just shows you the fluctuations. You can also see it like what happened in the last 1 month. You can see what they did in the last 3 months, 6 months, 1 year, 3 years. Very good way to track their progress. I like seeing 1 year and 6 months for sure, because it gives me an idea how well they were doing and how well they're not doing now, and or what their chart is like. So if they're doing well, it'll keep going up, which is a good indicator, because that means right now it's low and you can buy right now for the price it is selling at right now. And let's say if it's not doing well, then it's going down. Let's say you saw it today at 3, and then tomorrow you're seeing it's gone down to 288, and then next day it's at 270. It does not necessarily have to go down that much or that far. Just to explain how it happens. So at that time you're like, hey, listen, while it's going down, should I be buying? It only seems to be going further down. Okay, I'm really struggling with the earring. I don't know why. Um, I guess while this looks cute, I think for whatever reason it's not going in. I'm gonna try this other one. These are these cute earrings. So your next option is to be able to buy at the dip, and your budget is important because it decides how many stocks you want and how many shares of how many stocks you want. Now, if I'm talking about these two companies, I'm not saying you definitely pick up these two companies. You have to, while you're monitoring, aside from just seeing, its track record, you have to also keep reading up news, right? Like your option is to look up, your duty should be to read up about it. Like maybe if you're online, you're on Twitter, you're on Insta, wherever it is, you have, like, you see the ads, you see how well they are performing, what's their social media like. If there's any news in the paper where it's saying they've got great funding, or maybe the CEO has changed, these are like fluctuations which will appear on the stock market, because it'll show you that, like, this is a good change or this is maybe a not uh, positive change, like how people perceive the news or perceive the change. So yes, this was went in. This is, once you've been tracking that news, which is your responsibility to be able to see that how is the company faring online, right? And once you've seen all of that, you decide your budget. Your budget helps you understand how many stocks you want to buy. But your budget decides how much you're comfortable spending. If you have any savings, you have any kind of regular income, or you have any kind of allowance you're getting from your family, and that will help you understand what is your spending limit. You're willing to spend 10,000 rupees, and next month you may not have that money, or maybe like because you've spent on all the Diwali and everything, so you may not have money even right now. But let's say, for example, like you don't have 10,000, next month you have 1,000, which is fine because it helps you identify how many shares you're willing to buy. Do you need to buy shares right away, or do you want to save it up and buy it later on? With me, it works in the sense that right now, if I have money, I'm very open to spending right now and picking up shares, because I know I have money now. Maybe next month I may not have that much money, and I don't know if I'll be able to buy it at that price which it is on currently. Who knows, maybe the shares do really well and become more expensive, so I'm just even going to feel worse, because I'll be like, I missed it right now when it was a little lower, and then while it got expensive, I couldn't buy it then. And maybe I can still buy it then, but maybe I won't buy as many shares. Like if I buy one share today, two shares today, and next month I'm like, shit, I can only buy one share. So I always feel like while you are tracking, you should also be aware that you have some budget and you have this much you've allotted just to put into the stock market. You are spending, there are many ways to spend on stocks. You can pick it up and picking up shares directly, or you can set up a SIP, which is a systematic investment plan where you put in some amount of money regularly. Like they'll take it every month and they'll put it in this fund. The fund decides which stocks they want to buy, and it's like no headache. You don't have to even think about where the money is going, but the risk is that you have no idea where they're spending, and it may do really well. And depending on the market, if it doesn't do well, if the market's not doing well, so even shares will also reflect that. So its value may not be as high. It's still the safest because having a mutual fund, which is what an SIP creates for you, um, keeps collecting over time. And I think, like, if you have that money and if you have that option, I think you should have an SIP also, and you should also be able to look into stocks. Doing research, you have direct idea where you want to spend, and when you see it not tanking, then you know you can save your money at that time. With an SIP, they have different ways of working, so you can't control whether they want to remove the money or not, because when they invested in a company, they're not like, hey, let me take it out, let me put it back in, let me take it out. So you have that option when you're dealing with stocks on your own. So if you're spending money on, let's say, sorry, just want to make sure. So these are the other options. It's like a retro like sunglass. I also like that they're small. This is another one which is like gray version of that, and I like that it's got like different colors like gray and brown. So let's see. You have to have discipline about like having enough money to do your monthly SIP. So if, let's say, you put aside 100 rupees per month to put in an SIP, and you should be able to have 100 every month. Like, you prep enough that even if, let's say, you spent all your money like shopping, drinking, going out on a holiday, on your family, on a festival, and you also want to spend on stocks. You want to spend $1,000 on stocks this month, or you want to spend 10,000 on stocks this month. This should not touch your budget on doing your SIPs, which is 100 a month, right? You are free to do 100 a month, you can do 500 a month, you can do 2,000 a month, 5,000 a month, 10,000 a month. You're doing really well for yourself, and you have like 1 lakh a month to spend. And I know some girls who are able to put in that good chunk of their money and their salary into an SIP, which means that anytime they want to take it out in the future, they want to, they're good enough to take, like, you have to get a new apartment and you need the rent deposit, you have enough money in these things, you want to go on a big fancy holiday, travel with your friends, go on that concert, pick up that, iPhone. So you have money set aside for these things, and this is a good, very good, healthy financial habit. A few months back, I think when the stock market wasn't doing well, I wasn't able to make it for the SIP. What I was seeing that the stock market also is not faring well. I mean, my money was going in also, and I wasn't able to even like. So I paused it for 1 or 2, 3 months, which I'll also explain. You can do that. All right, I'm going to try changing into my jeans or my pants to see what looks good. Have to get ready. It is. This is my pajamas. I have my t-shirt on. I'm going to be trying my pants. This is what I'll be trying on. Have my pants ready. Still in my slippers. But yeah. So now we decide how we're doing the purchase. Our next step would be to see. I'm going to just try some, pretty little scarf. Um, so you've identified a stock and you're looking at how much you want to buy. So let's say you've figured out a budget, and your budget is on the price it is selling at today. So let's say it is selling at 300 rupees today for Zomato, and Swiggy I think is selling at 495. So let's say 500 is selling on today. Okay. Pull back. That's too dark. Maybe something cooler. Your step will be is that you will end up going on your app, your ICICI app, your direct app, or your any of the platforms you have. So either you can do it on the computer or you can do it on your phone. I've decided that okay, 495 is what I want to pick up Swiggy today, and so let's just take 500. 500 is what the stock amount is, and you will place an order. It will take you to whatever the default options are. Just stick to that for the time being. I'll explain the details a little later. Whatever price they have currently, that is what you will be buying at. So I've decided that I'm picking up one share of the Swiggy, and I click on purchase or buy. It'll ask me how many shares I want. For my amount of money, I have 500. So I'm just going to do plus one, mean the plus, which tells me that I'll be able to make one share purchase today. Obviously, you have more money depending on how much budget you want to, allocate and how much you want to spend. You will spend that much. So if you have 1,000 rupees, then you can add 2 shares. If you have multiples of that, then you add that many shares. At that price, it will be decided that this is what I want to buy it at. Then you click on buy. It'll ask you that to add the funds from your savings. Now, because my ICICI is linked to my DMAT, it just immediately takes it from my savings. So if I have that amount of money, and once it's taken from the savings, it will add the funds and it'll make purchase. Now it will go into your executed or currently under process situation on your app. You'll be able to see where you have made your transactions, so whatever trades you've done. So if it's still under process, that means that it's waiting for the day end. The day end of stock market is usually around 3:30, and by the end of the day, that's when it will transact your purchase. That was your trade. So welcome to the world of investing. You have made your first trade. I have my like loafers, the animal print ones. It's like comfy. You say today's Zomato is at 300, and you've seen that it's picking up. It's been going up to 320. It's gone up to 330. So you know that it's rising. That means it's becoming expensive. So I would say that the best time, according to me, is buying it when it dips. There might be a chance when it's gone up to like 315, and then you're like, okay, you know what? I know it's going to go up to 320. You're just monitoring. By chance, it just goes down because of some fluctuation in the day, some trade or whatever. So the 315 goes to 312. Buy it then. That's your dip. Okay. And that's only because I'm only telling you to buy it at that price, because obviously it's going to keep rising. And there might be chances and goes down to 300 also, and you're like, hey, listen, I got at 315. What happened then? But that's just the process of, the trading world. You will probably never be happy at the price, and you'll probably be always very happy that, hey, you know what, my price went to the amount I wanted and I could buy it. Now the events that happen in the world, in the industry, basically ends up being, especially like big events, like let's say there's a GST announcement, most of them take a hit. Stock market takes a hit, it shows that it's gone. Now maybe the announcement that GST is being reduced and has been removed or whatever it is, those are good news to the stock market, right? So the stocks do well. So this is a way to understand that it means stocks doing well means the price is going up. So that's a not advisable time to buy. But if the stocks are not doing, that's a good time to buy. Again, you know that it's only doing well, and news is going up. You don't want to miss out on the price you have available today. That's your call. You will be like, you know what, I want to pick it up today itself, so you will pick it up today. Tomorrow you will pick up your share, how much ever your budget is. So if your one stock is 300, you want to buy 3 shares, so you get to spend 900, and you've got those in your account. Again, same process what I explained with Swiggy. Now you've introduced yourself to the trading world. I've explained till this part. My next round will be to understand and explain to you what happens next. What are the charges, what are the taxes, all of that, the tough stuff. But none of that will affect whatever you've done today. It's not going to be like something, oh my god, I should have known this before taking my first step. I just want you to be aware that this is the basic process. Anyway, I hope it made sense to you, and I made this process a little easier. You have to be getting ready financially aside from just getting ready. So until next time, thanks for watching. I'm so glad I could be of some help if I have been able to. Yay, thanks.